Welcome back to the channel, guys. It's a Friday afternoon, but I want to bring this update to you so you guys know exactly what's going on in the market and what to prepare for next week. Because next week we're expecting a 25 basis point rate cut. Also, we're predicting that we're going to get 50 basis points. But based on economic data that was released this week, we're not sure. But we know for sure one thing, that we should be getting a breakdown where interest rates is concerned. So on September 17 and September 18 of next week, guys, Jerome Powell will be hosting his federal meeting, which is the FOMC meeting. And in this meeting, he will discuss what steps, what strategy they're using to go forward in regards to inflation, because we all see that inflation is cooling. But Jerome want to get more solid information in regards to inflation, where the PPI is concerned and where the core PPI is concerned and where the PCE is concerned and the core. And we all seen what happened this week, that they come in as expected, except for the core is still 0.3%. So this is something the country have to work on. And when this happens, then we can see greater rate cut. So again, next week, Jerome will be hosting his meeting with the central bank, and then they're going to take further measures from there. Again, whosoever is looking to purchase a house this year, this is the right time. Why? Because with lower interest rate, more money, it will be affordable. So in other words, you will be more luckily to get a loan. You will be more upfront to receive loans. Why? Because interest rate is coming down. So that goes right to the bottom of the quote. Also, I want to show you one stock that I recently bought some shares in. Why? Because it's a very volatile stock, one to begin with, and it's a long-term play for me. This is the reason why. So what Supermicro Computer does, it's an artificial intelligence company that provides Silicon Valley-based provider of accelerated computer platform. And we all know where Silicon Valley is, nowhere other than California, which is Apple-based. So Supermicro Computer is a great stock, very, very extremely volatile. So if you're not planning to hold this stock for a while, please do not buy this stock. I tell you, please do not buy. Earlier this year, the stock was trading at $1,000 a share. Now the stock is currently trading at $456. So within the year, the stock is still down. The stock is currently down on the year. So let's see how much percent this stock is down. All right, let's go over. So our ticker symbol is SMCI. Not there. It's not where I want to go. All right, let's go SMCI. Let's see if this stock is up on the year or it's down. So let's go to year to date and see. So year to date, the stock is up 60.82%. This is crazy. Not even the S&P 500 is up this much on the year. But again, as I said, January 18, the stock was trading at $310, and now it's at $457 a share. But again, this is a very volatile stock. I'm just bringing it to your attention because I think it's a portfolio grow. This stock can grow your portfolio with the AI era that we're going into, with the AI advance that we're going into the new breaking edge AI technology. This is a great stock, and I do have shares in it. That doesn't mean you should get shares in it, but I'm just bringing it to your attention. But the stock that I think each and everyone should have in their portfolio is nothing other than the greatest investor in the world, Warren Buffett stock, which is Berkshire Hathaway Class B. Again, this stock is tremendous. So let's break this stock down to the T. So previously, last year, they beat earnings by 60 cents, surprise, and they beat, of course, they're going to continue beating earnings because this is Warren Buffett we're talking about. This is the legend of investment. He owns this stock. He created this stock. And also from this year, first quarter beat, second quarter beat, and their next earnings is in the next 52 days. Why I'm bringing this stock to you? because I see this stock as a portfolio grower. This stock can grow your portfolio tremendously, guys. Because if you had bought this stock from January, you would have been up tremendously on your return. So this is a great stock, and I'm gonna break it down for you. So let's go right into it. So market capitalization is 964.11 billion. This is ridiculous. This is the reason why I am investing in this. But is it time to invest in this stock? Not yet. I don't think so. Why? Because it's currently in its pulling back stage, and I still see this stock as a strong buy. So for short term, it's up. For intermediate, it's up. On short term, it's down because this is not a short term stock. You don't want to buy this stock for short term. We're looking on a long longevity with this stock. And again, this stock is Warren Buffett stock. So a lot of resistance here, but I'm not really paying attention to that. I just want to bring to you the technical aspect of it. So it pushed up to $484. Of course, got rejected because it was pushing up skyrocket. As you can see, market was pulling back, but yet still the stock was still going back. Again, anything goes up, always pull back, guys, always. And this is a buying opportunity. So my buying opportunity is either I'm watching to see if we get rejected, because previously we pulled back to 445. We're currently trading at $447 a share. So of course, I'm gonna draw a line here and also set an alert to see if the stock continues to pulling back. And if it do, I'm not gonna get in, because I don't want to catch a falling knife like I have done previously. But I have learned. So I'm watching to see if we do consolidate or if we do pull back below $445 a share. If we do, I know our next support would be at 424. So and then this will be my buying point. Why? Because it showed previously that once it enter our 200-day moving average, there is always a bounce. Sold off, got rejected, again support, came to our 200-day push, rejected again, push. Patterns tend to repeat themselves. They don't have to, but patterns tend to repeat